somebody who's been following what Warren Buffett does very, very closely, and he's a celebrated investor in his own right. Mr. Raamdeo Agarawal needs no introduction, with us in our studios to make sense, one, of the preachings of Warren Buffett, if you will, and hopefully give us some nuggets of his own as well. Raamdeo, so good having you in the studios. Thanks so much for joining in.
So nice to be here.
Yeah.
Okay.
You know, before we talk about the Buffett ladder, when I go to your investment floor, I see a big picture of Warren Buffett. I wonder if you ever meet him, what will be your first reaction?
I'll be speechless. And I can actually reach him. Okay. So I keep thinking, what will I speak to him if he gives half an hour or 1 hour?
Exactly.
So I don't know what to ask him, you know.
Why is he buying aviation stocks?
You know, I mean, he has written so much. Yeah. Literally everything is in the press. And yesterday, I believe, the 3 hours interview was there in public. So I think she must have asked literally everything. I saw some snippets of that. So clearly, I mean, he's so open. There is nothing left which somebody else has not asked. You know, and he has been so painfully in various forums, various universities, interactions with the students. I think what we should do is, this time we are going to Omaha, we must seek, you know, a day before or something, some kind of time for Indians. I mean, a lot of Indians go now as a group. And he has celebrated Mr. Ajit Jain. He might
in a big way, in this
big
letter
way.
as
So
well.
I think, again he has said, you know, if you have to, what he said?
Swap.
Swap. Please don't avoid doing the trade. He said, do the trade. If you have to swap one guy, please swap Ajit for me.
Yeah. You know, but what Warren Buffett says, besides, of course, his view on individual stocks, companies, etc., it's like going to a dietitian. You know what not to do. You know not to have fatty foods. And he says, you know, make most of it when the world is in panic. That's the time you need to buy. And that's something that you also have been propagating. There's nothing new in that. Do you sense in the current day market that time and opportunity is gone? Or do you think there could be some time when in our markets we could see some sort of a panic bottom being hit?
Again, you are anti-Buffett, you know.
I'm not anti-Buffett at all.
You're starting with the question of timing the market. I mean, just forget this. I mean, this is where exactly the investing ends. You know, the moment, I mean, actually it is getting killed because of this timing issue. You know, is it the right time? Is it the right time? You know, I mean, see, you got to be avoiding the complete, extremes when the market reaches. And it reaches in 7-8 years. Once it reaches, and from there market collapses, index collapses, everybody's portfolio also collapses. We are not in that kind of situation. By various measures, whether it is IPOs, whether it is valuations, whether it is the earnings boom, whether it is some kind of excesses in some segment or here, I don't see it here. I mean, our market cap to GDP is about 75-80%. Slightly in this recent rally, it has gone up from 70 to 80%, but I don't see that kind of euphoria, you know. I mean, one of the broad measures I see for euphoria to happen is then when market cap to GDP rises to more than 1.5. It was 1.8 in 2007 when you collapsed. Our GDP was 45 lakh crores and market cap was 75 lakh crores. What more you want, you know? I mean, 30p and all sorts of excesses were there. Companies were valued, you know, somebody announced 5,000 acres land acquired
bank,
somewhere, and suddenly that stock will be up 10-20%. That kind of madness was on. You know, when the stocks started moving away from the earnings, you know, on some imaginative thing, page views, land bank, those are the signs of you know.
So we are far away from that, you're saying.
At least in India, we don't have that kind of froth. In US, like Uber, so yesterday I think Goldman Sachs or somebody put a sell and it fell promptly 5-6%. So there is no earnings. They are raising money left, right, and center. Of course, it's a wonderful model. It's a innovation for the maybe of the century or something like that. But yet, stock market is about the earnings. We must not forget. At the end of see, you can have a wonderful story, but you need the numbers. Narrative and numbers must go together. The moment when the excesses happen, when the story is wonderful, number is yet to come. So you can build stories, you know.
Yeah, that's why I asked, because price also you can't be blind to.
No, you cannot be. You cannot be. Investing is about all the price. But at the same time, if every day you keep asking on every 5% move, whether is it done, then when do you do it? In a bad market, you say it will collapse further, so don't buy. And in a slightly warm market, you say, is it done? So neither you want to buy in daytime, neither you want to buy on the night time. So you just stay on the side. Go and buy your fixed income, you know.
But an interesting statistic that somebody told me over the weekend was also that since we were talking about Uber, that for the first time in many years, the number of people traveling by subways has actually come down in the US. And a lot of people attribute it to models like Uber as well. But Raamdeo, you know, if we look at the letter, I think in many ways, in his tribute or in his mention about Jack Bogle or otherwise, Warren Buffett lays out, and he's devoted 3 pages to this 10-decade-old bet as well about passive investing. It, however, ends here. My question to you is, does that model work in a country like India right now? Attribute more to passive investing and less to active investing. Would that be different for a country like India and for Indian investors?
Yeah, so you're asking absolutely right person, because I spent 4 years of my life trying to build a passive ETF company in Motilal Oswal AMC. And I mean, we are so ahead of time. I mean, the whole concept is kind of not taken off in India, and maybe another 10-20 years, because active managers, almost 70 to 75% of active managers are doing well.
Yes.
Because you have a 50% management block. See, unlike in US and all, here you have 50% management block, which will not perform well. And at their cost or retail, see how the market is divided. 50% is with the management, 20% is with the, say about one third between Indian institutions, mutual funds and retail. I mean, I think FIs are about 20% and DIs are about 17 and retail is about 13, 14 or something like that. So, FI and DI are the, I would say, smart lot in aggregate. We are talking about all in aggregate.
Sure.
Compared to your retail and promoter group.
Right.
So, so long as this promoter group is very large, I think most likely active managers will do very well.
Let's look at that site actually where Buffett has placed his bet, and you may want to make note of that, Raamdeo. The site is longbet.org. This is a site on which Buffett has gone public, and we'll put up that graphic just to mention that where Buffett has really placed his bet. There you go. The site is on this bet called longbet.org. It's a $1 million wager, and Buffett has openly challenged that best of the hedge funds on a 10-year basis, they will underperform the S&P. Raamdeo, the reason why fund managers are struggling to outperform benchmark index is because there is a charge. There is charge in terms of there is a fee.
220 fee is there.
Fee is there. And B, markets are becoming efficient. That could be the situation for Indian markets as well going forward.
Yeah, so clearly one is the fee structure. Second is, first thing is where you are talking about. In US, it's very, very competitive in the sense that you are competing with yourself. Fundamentally, all the active managers are competing with themselves and they are brilliant lot. So obviously 50% are likely to do worse than other 50% in aggregate. In aggregate, okay. Second, in this hedge funds, by very nature, they are not seeking the highest returns. They are not long only hedge funds. They are long short. Now, when you do long short, mostly what you are avoiding is the less drawdown. I mean, when the market goes down by 50%, I mean, this is my limited understanding of hedge funds, but what I have seen, they want to be long as well as short and market neutral kind of thing. So, in that process, they might earn lower in terms of return, but volatility in the return will be less. That's the whole objective of being hedged. So, earning less than on a say 10-year basis versus active manager or say an index, the hedge fund guy is not doing so well. Probably is understandable, and on top of it, this 3, 4, 5% fee which finally comes, because fee is charged when the performance is there. When there is no performance, there is no punishment. I think that really is the problem of hedge fund. Downside is 0 and upside is you participate all the way, and 2% fee in any case comes in. So I think the excessive fee charging from the pool is the source of underperformance and the competition.
After making fun of the airline industry for years now, Buffett finally has bought into airline stocks. And I was watching Charlie Munger on Global Network, and he said that we criticized railroads also a couple of years ago, but now the airline industry is getting consolidated. So you're feeling secretly happy that you bought airline stocks and Buffett has bought airline stocks after you?
See, the economics probably in both the countries are different, but the driving force in airline, I mean, for us was the lower cost of fuel and again consolidation here. And one player, see, we didn't buy so much airline as much as Indigo. The superior airline and the kind of economics, the low cost economics and zero capital employed on the plane side, working capital side negative. So negative capital employed across and the growth and available at reasonable price, and the size of opportunity is so massive even now. But we didn't make money. So to our record, we have not made money. We have lost money in Indigo. So
But the question is, Raamdeo, is the state set for aviation to make money in India? I mean, if crude, and Warren Buffett, I think, or Munger, one of them said that they see very little probability of crude staying above 60 or above 65 for the foreseeable
anybody's
future.
prediction is of no use.
Is no use.
It's no use.
But
I
you
would
work
not
with
take
an
anybody.
assumption, right, in aviation?
Yeah.
So what's your assumption right now?
No, see, the point is that oil prices are passed through. You are a customer, on your behalf I am flying the plane, I am hiring the plane, I am buying the fuel. The issue is in India, low fuel price means low ticket prices, and that means high affordability. You know, so if you Mumbai, Delhi, if it is 4,000 bucks or say 5,000 rupees, so X number of guys will come. If you charge 10,000 rupees, then the number of people who can afford will drop dramatically. But your capacity is already built, and capacity charge, nobody is going to pay. So you know your operating leverage will work against you. So it's a very crazy business. There are a lot of moving parts in terms of fuel price, in terms of other the competitive forces, the capacity utilization, at what price you are selling, what are the seasons. So there are lots of moving parts. At least we have found it difficult to make a predictable model.
Sure.
Otherwise, cash flow is very good, profitability is very good, managements are transparent, they are accessible. But in investing, what you need is some kind of a grip over the numbers. Which
Are you still holding on to Interglobe?
We are holding on to some. I mean, we have definitely reduced the same, and we have lost money. That's the bottom line.
Okay, now Buffett has bought Apple.
Yeah, I was just coming to that.
I mean, he's given a logic saying that, look, I went to the park and I saw my granddaughter playing with an Apple, and that's what I realized, that Apple is becoming a consumer brand now. But along with Apple, he also owns IBM. For a man who's always
one of the logic he has is that which is not that much counted in the investing here. Here we look at only the current earnings and earnings growth and the P multiple. These three triangle we do. There the buyback is very important part of it. If the free cash flow is there, massive free cash flow is there, you're buying at there is a guaranteed thing, like as an activist or the fair deal in terms of distribution is guaranteed. They will force Tim Cook or anybody to buy back the shares. If the growth is not there from the current level, so that $40-50 billion, whatever they are earning, they will end up buying 5%, 6% of the stocks every year. So if you are, say, you are buying at, say, 10p, so 10% is earnings yield. Another 5-6% you can gain by way of buyback. So buyback along with a modest growth and current low P. See, these companies are also available at very low P multiple. Yeah. So low P multiple, high free cash flow yield, and very predictable buyback opportunity. I mean, these are things which are working. In IBM also the pitch is same, that he will keep buying back. I mean, he sees that, and I think now IBM is also an all-time high. But what is happening is, I think the real part of the report is not in these, I mean, yes, they are there. But the real thing is, first, the moment you open, he gives that 50-year history of performance.
Yes.
And there he talks about the market matching the intrinsic value growth of the company. So intrinsic value has grown at 19.5% or something like that. And intrinsic value, he means book value. First indicator of intrinsic value is the book value. So book value over 52 years, when he bought it, I think 1967 or 65, I think 65, at $17. That time it was $17, now it is $172,000 or something. Yeah. So it has compounded at the rate of 19.2%, and the stock in terms of listing has given about 20.5%. So basically he is saying that market moves in tandem with the intrinsic value change. In the short run, we can be a bit confused, but in the long run, your real growth in the market is absolutely maths, in the sense that it's a very predictable machine. The pace of increase in your intrinsic value is going to the pace of your return in the stock. That's one message. Second is that right now his net worth, like last year, has grown by 10.5% or something. He is saying that now he has become so big that he cannot grow his intrinsic value by more than 10 or 11%. That we realized 4-5 years back when I was having the stocks in my portfolio. I tried from all sides with best of my understanding. Can he do 20%? Not 25, but 15-20%. it looked almost impossible because his intrinsic value cannot grow by more than 8-10%. So his ROE is also less than 10% right now. The only thing left is that he is holding about $100 billion worth of cash or cash equivalents. That he is holding for quite some time now, and he is hoping someday there is again going to be a complete collapse in the market. That's why he has talked about two types of fears. Okay, there are two types of fear: good fear and bad fear, like cholesterol.
Good cholesterol,
bad cholesterol. So there are two types of fear. So what he says, you should not forget two things. First, widespread fear is your friend as an investor. Okay, which serves up bargain purchases. Second, personal fear. Personal fear is your enemy.
Yep. So
public fear is your friend.
Is your friend.
Because it gives a cheap stock.
Like demonetization.
Yes. So he's saying the personal fear is your enemy. It will also be unwarranted. You should not be fearful in the market, what we started with. See, if you're coming to a stock market, you're buying pieces of businesses, you should not be fearful. You must know underlying value. The problem comes from not knowing the underlying value. You're only focusing on the price. So if you know what you're buying, you should be fearless, irrespective of the market levels.
So what's that one conviction, Apple stock of India, so to speak?
Don't get into
there
that.
There is no Apple.
No, there are multiple apples. Because see, India is the fastest growing economy in the world right now. And it is going to remain so for next 10-15 years. Probably it will accelerate further from the current levels. So you will give birth to a lot of growth companies in India. By very definition, you should have a lot of growth companies coming out of India. So you have to figure out, see, G is there, G is going to be there. The issue is where is the Q? You have to differentiate between a good quality company and bad quality company, and then growth is common factor. Once you do Q and G, I think that's where you'll be able to find some wonderful companies, whether it is private sector banks, whether it is oil companies, whether it is consumer companies, auto companies. Look at, you are expected, Maruti is expected to deliver some 20% additional volume this month. Tomorrow or day after it will come. So what I'm saying is that which country has this kind of a volume growth in cars? And predictably for many years to come. They are putting up more and more capacity. China and India both we used to consume about less than million car. In fact, India had a marginally higher consumption in 2000. Today, China does upwards of 20 million. We are doing 2.5-3 million. So can we catch up in next 10 years? There is no reason why we will not. So what I'm saying is that opportunity, and you see that industry structure, 45-50% is one company.
So if I have to really put the Buffett thought and lift it up from why he's buying IBM and why he's bought Apple, let's look at what he's trying to address. He's trying to buy stocks when they are cheap. He's trying to buy companies where cash flow predictability would be huge. And he's trying to buy companies where you know that the future cash flows will be given back to shareholders. I get a sense that Indian IT companies are embarking on that same pitch. These are good companies, well-run companies, going through a cyclical downturn. They're cheap. P multiples are just north of 10 or 11.
I think, Nikunj, I think one of the main thing is he always looks for the franchise, unbreakable franchise. What the edge, the companies with massive edge. You see, every one of us have iPhone.
Apple phones,
This is the only one consumer product I have seen so uniform. Right from say Federer to Buffett to you, me, or below my star. Everybody is the same phone, same color, same features, nothing. Very rarely you find any consumer product like this. And it is addressing to almost entire planet Earth. Of course, affordability is a different issue. But and day by day, everything is coming into the phone. If you miss out on a wallet, it's okay. But don't miss out on your phone.
True.
Your phone is your wallet as well.
Yeah, first thing you wake up in the morning and try to figure out where is it visible somewhere.
You bought global stocks in the past.
Pardon?
You bought global stocks in the past. If I look at your declared portfolio in 2013 or 14, you had Berkshire Hathaway.
Yes.
Would you be looking at buying something like an Apple or an IBM going forward?
Yeah, and not these two stocks, because maybe Apple I understand to some extent, but IBM I don't. So it's question of understanding and your conviction. And my style is QG. His style is Q and P, in the sense that he wants to buy high quality free cash flow with a very low price.
Low valuation.
Because see, for him, he is sitting on 100 billion. For him to deploy that 100 billion is the biggest challenge. And still 30-40 billion is flowing. And now, one of the big change he has done this time is he has said that marketable securities, see, we all think that Buffett is for holding forever if you buy anything. So he has categorized into two categories, marketable securities and permanently strategic investments. So he is saying that in marketable securities, please remove your misconception that these things are forever. So clearly he is realizing because of internet or whatever, over a period of time, the companies are becoming challenging, obsolete and all. So he has to check out some of the companies. So he is preparing the ground, and in his operating manuals, I think he has made those changes. So clearly that's another big one where holding forever, that notion is taken away as far as marketable securities is concerned. In marketable securities, you cannot do this. I mean, you have to think about selling at some point of time. Every company has a limited life cycle, and at the peak of the life cycle, or close to the peak of the life cycle, if you are not exiting.
You don't sense Indian IT is close to that stage, do you?
Not all the companies. I mean, my understanding is limited. I'm still struggling to figure out how it will shape up. The next round, they renewed 2-3 times. This time, the digital economy, which is becoming bigger, how will they come back? Because see, digitization of the world is happening very rapidly. We will need a lot more services, but I think probably different types of services than what we are doing right now.
True.
So that challenge is there.
Raamdeo, so and I'll just again take a cue from the letter. I think one thing that he also did is speak about a lot of global small acquisitions that his teams are doing. Praised a lot his 2 fund managers too. But he spoke extensively once again about his benchmark business, which is insurance, and spoke about how while they have grown at such an disproportionate rate, the growth is still to stay. I'm just trying to get your thoughts of whether you think, because insurance is by and large a uniform business across the globe, more or less. I mean, you would have the same model almost being replicated across. In India, the sector is just starting to, kind of take shape and form. Do you think what Berkshire Hathaway did with its insurance business, maybe not at the same rate, but some of the Indian insurance companies could do that? Is the market large enough for that?
Yeah. So in insurance, you have 2 types. One is life insurance, and second is casualty and property and all. So that general insurance, the casualty and property, we are yet to become big. I mean, most of them are in public segment. There are some which are listed, Bajaj Alliance or something. But that part is very predictable, and it's a simple business. You take the premium today, and your claim ratio is there. You invest and make money. So it's a very settled thing. It's a 1 year, 2 year, 3 year kind of situation. Whereas in life insurance, you buy it for 25, 30, 40 years. I mean, a 10-year kid, if it takes for 60 years, you're talking about 50 years of this thing. So all the estimates, all the profits are based on estimates, actuarial estimates. So there are a lot of futuristic assumptions and all. So there, what the management is saying in terms of data, and what has been their track record in terms of achieving that whatever projection they did, that is very important. And scale is of utmost importance. So reputation and scale. And so in that, we have 2 companies like Max HDFC, I'm just saying one as 11.5%. Then you have ICICI Pru, another 11.5%. Then you have the SBI Life, which is another 10%. These 3 have clearly got a different league. Different league. And in India, one of the more added advantages is that there is a value migration. From a complete 100% PSU LIC to they are losing continuously share, and which is very healthy also. So they have become about 50%, and private sector has become 50%. So as we go along, like banks, most likely public sector will keep losing the edge, and as the prosperity increases, the acceptance of insurance, and we are grossly underinsured kind of a country. So as that, it's and youngest country, best for the insuring. So a lot of these forces, demographic profile, the rising income levels, and then you have the value migration where the one big player is vacating the space, and within private sector also it is consolidating. So I think it makes a very strong case for having private sector insurance companies in your portfolio. Right now they look to be pretty expensive for their current this thing, but if you see today's LIC's number, if any one of them were to reach after 10 years also those numbers.
And government is looking at taking GICs of the world public, so the sector is getting created. So okay, closing comments, last question. We've really overshot our time limit. We've extended appointment with you. We're talking about Buffett's newsletter, but I also know that you write a newsletter. Your desk writes a newsletter. So if you have to summarize your AMC's activity in a simple newsletter form, that what you did last year, what you bought, what you've sold, and where do you see growth for next 2 or 3 years, how would you like to summarize a newsletter from your desk? Let's say if you write a newsletter. And remember what Buffett said, you have to make it simple. Imagine your wife is reading it, so you have to make it simple for our viewers. Let's talk about that newsletter.
So, I mean, we keep writing every quarter. We call it Buy, Write, Sit Tight newsletter, BRST newsletter.
I do enjoy reading it. That's why I'm asking you. So
Yeah.
let's say if you were to write it for what you did last year and what you propose you would be doing for next 2 or 3 years.
So, this year, see, because of wealth creation studies, see, my own thoughts are shaped in investing by my own wealth creation studies. So, this year we have done, after doing 20 studies on what to buy, we have done this study on how much to buy. So, if you go through that Kelly's formula and things like that, what really matters is to create an edge. Because, see, you have to create advantage to beat the market. Okay, one is that you have to beat the market and you have to beat the peer set. Now, how do you do that? So, you have to create edge in understanding the companies. Okay, because price is there to everybody. There's not much of advantage in that. Now, there are 2 types of advantages you can create for yourself. One is the informational advantage and second is analytical advantage. Now, informational advantage, thanks to internet, is just closing down one by one. Yet, there is a lot of merit in meeting the management, meeting the ex-employees, meeting the dealerships, and really looking at the product and things like that. So, there, of course, the information to some extent is going to help, but that edge is clearly coming down. Earlier, insider trading was there. After 1 year or 15 months, you used to get the copy of balance sheet. Today, you are getting electronic copies right there. आप लोग बहुत अच्छा काम कर रहे हैं.
Information is available to all.
All, I mean,
At the click of
these
a
channels,
button,
I mean, they're doing a wonderful job of reaching out to the management, asking tough questions. So, information side is done. But analytical side still remains the prowess of the people who have the frameworks. How to look at competition, how to look at terms of trade, how to look at demographics. So, the whole lot of things, how to look at quality, how to look at the management, what are the characteristics you should look for the management. So, and how to look at valuation, what are the mathematics of compounding. I think if you ask me one thing, one title they have not given to Warren Buffett is King of Compounding. He is ultimate guy in compounding.
But a Buffett newsletter also talks about what he's bought and what he's sold. So if you have to summarize the part 2 of your newsletter.
He's not SEBI, regulated guy.
No, I'm just trying to
Thank
understand
God
the
for
thought
that.
process here. For example, I'm just trying to understand the thought process here. Let's not talk about
Individual
stock
stocks,
here,
Individual names,
but
but
you can
yeah.
give me a thought process of the construct of your portfolio for next 3 years in terms of a weightage. You can give me a sense of where are the pockets you're looking at, reducing your ownership. I'm sure when you look at a portfolio, it has to be a combination of both buying and selling.
So, see, we will always have 20 stocks, 21 stocks. So, obviously, if I add 3 stocks more, 3 stock has to be chucked out. So, portfolio is very static if you look at it. I mean, if you look at 6 months back portfolio today, you said, Raamdeo, you've done nothing and why have you charged me fee? Something like that, okay. But there is a lot of change. 1 or 2 names will change and allocations will change. Allocations are very dynamic. We can go from 3% to 9% and 9% to 3%. So those things keep happening, which is as much as selling. Like as I said, Indigo, we started with 9.5. Day 1, I bought, we as a fund house, we were so bullish. We bought literally everything, okay. And then we realized that, and the stock just flew. So there are a lot of very interesting companies which are getting listed in next 12 months. I mean, the first time you'll get to see
Retail company going public.
Retail going public.
That's a no-brainer, so you can speak about it.
No, you'll get a lot of no-brainers. This is of course hyped up big time. So you have to pay the price for the hype, okay. But stock exchange, the world's one of the most promising stock exchanges coming up for very large IPO, hopefully this year. And then many more little less known company, but probably they will have a franchises which are as powerful. See, we have to figure out where is the strong franchises there and growth is ahead, because all the new banks, a lot of MFI banks, a lot of one of the small finance bank will also come up. I would think that is even more promising to me than anything. So where you have an edge in terms of understanding the business and understanding the management. What happens is business broadly everybody understands. Once in 15-20 days, because the business is business. But understanding the management and comfort with the management and what management can do, what is going on in his head in terms of what he wants to build. Because ultimately, it is the entrepreneur's call, one person's call. Like what is Mukesh Bhai doing? He is building world's one of the most promising telecom company. Out of nowhere. So if somebody is not committed to building something, how will you build it?
You know, I'll tell you what is going in my head. I want to extend this discussion. What is going in my producer's head? Rap, because you've extended the show. So I'll have to go by what is going in my producer's head. You know, it's been fascinating.
Yeah, we can just go on and on
Exactly.
chatting.
It's been a very intriguing discussion, but 10:38,
Yes.
the clock is ticking. I have to respect the time, and we have to close the show. And thank you for stopping by, and thank you for
thanks.
extensively discussing.
Find us on Facebook at facebook.com/ETNow and don't forget to click the like button. You can also follow us on Twitter at ETNowLive. To stay updated with all our programming, hit the subscribe button on our YouTube channel by logging on to youtube.com/user/ETNow.